You're listening to That Home Loan Hub. I'm Zibuni Salimova, here to make home loans and property investing simple, smart and stress-free. Let's get you closer to your property dreams. Hello and welcome back to That Home Loan Hub. Hello, Kunch.
Kia ora.
That was a bit of a pose. Kunch, today, picture this. We've got a client. They bought a house. All exciting.
Mm-hmm.
They've got the keys. They move in.
Mm-hmm.
What happens then?
Yeah. Let's talk about that. Let's talk about what happens after, or like a couple of key things to think about after you buy your first home.
All right.
So one thing I thought about was your KiwiSaver. So you've used up your KiwiSaver to purchase your first home as your deposit. Now you can't touch it anymore till you're 65. Yeah, so imagine you're, early 30s and now you've got another 35 years of KiwiSaver. What do you do with it? So it's a good time to review the fund you're in. This is not financial advice because I'm not a KiwiSaver expert, but good time to, review the fund because when you're using it to buy your first home, there's genuinely a first home buyer fund that most providers have.
Which is non-aggressive,
correct.
Usually, low risk because you don't want to risk losing your whole deposit if you're about to buy a house. So normally you would be on a low risk profile, but it wouldn't generate you as much return. But once you bought a house, then you could reconsider what sort of fund you're in. Yeah, awesome.
Yeah, so just to reconsider that and just make sure that, it's working the way you want it to work.
Interesting. Yeah, I don't think a lot of people think of that.
No.
Okay, cool.
Number two. So number two, obviously you have to have home insurance, right? When you buy your home.
Absolute must.
It's a must. It's a condition of the banks or the lenders as well to have insurance. But have you got insurance for yourself? So that's what...
Hold on. Wait, what is insurance for yourself? What does it mean?
Well, let's just say... if something happens to you, right, you get sick or something and you're not able to work, you're not able to earn an income, that income is to pay for that loan.
ACC will cover me.
Yeah, ACC will cover for accidents. So just to point there, ACC, if you have an accident, they'll cover 80%. But if you get sick, they're not going to cover you.
Yeah, absolutely.
Yeah.
And this is something really important to note because, look, me as an insurance advisor, when I talk to my clients and I talk to them about the importance of having income protection, mortgage protection, we often get that response, ACC will cover me. ACC will not cover you if you've got cancer.
Yeah.
If you just, had cancer as a result of sun exposure, for instance, that's not an ACC related topic.
No. Yeah, so sickness more. So then, imagine, you have an asset that's close to $1 million that you probably have a debt of 80 to 90% and you get sick and you can't pay it. That'd be pretty crap if you had to sell that asset after you worked so hard for it. So, it's to think about having some life insurance, income protection, and we have amazing insurance advisors around that can help you.
Yeah, so apart from me as an insurance advisor, we also have a fantastic team member, Rebecca. She's joined our crowd a few months ago. If you've missed an episode with me and Rebecca, go a few episodes ago, search for it. We've covered some important topics there. But yeah, absolutely something to think about when you buy a house is get that insurance reviewed. If you already have something in place, fantastic, but get it reviewed.
Yeah.
If you don't have anything at all, you should be getting something.
Yeah.
Because you never know what's around the corner.
Yeah. And then point 3, I thought I'd just do 3 points. Point 3, obviously when you buy a house, we recommend that you have some cash set aside, right? Like to pay for the registered valuation and lawyers' fees and things like that. After buying the house, recommendation is also to have that at least 2 mortgage repayments saved, tucked away in a rainy day account sort of thing. That just gives you a bit of leverage in case there's a glitch or something in terms of your pay, or if you went on a holiday and you're like, oh, actually I want to skip that mortgage payment, but because I've got, 2 pays saved sort of thing.
Wow, you're very kind to them. You're saying 2.
Oh, well,
I
2?
usually say 3 months. You should have a buffer of at least 3 months. And I'll tell you the reason why I said that. Because again, with insurances, when you get a mortgage insurance, you've got a stand down period and you can wait either 4 weeks, 8 weeks or 13 weeks for the insurance to kick off paying. If you wait 4 weeks, your insurance is usually more expensive. If you wait 8 weeks, it's a bit cheaper. 13 weeks, even cheaper. So normally I say if you have at least 3 months buffer for your mortgage protection, for your mortgage repayments, and then mortgage protection kicks in, that's usually a good balance to have. So yeah, absolutely calculate what your repayments.
Mine was 2 pays, so yeah, when you go on holiday, not when you get sick.
Yeah, so if we stuck with at least 2 to 3 months, so 2 repayments to 3 months repayments, you guys will be in a very safe way. So the way you worked hard and saved that money for your first home deposit, you can do this again. So go a little bit hard, skip on those takeaways, skip on those coffees, put the money aside because again, you just don't know what's going to happen. We had a client that bought a house, the water tank blew up. We had a client that bought a house and discovered holes in the roof, so all sorts of things can happen and you need extra buffer. So don't spend all of your money as a deposit. And this is where, we try to usually pull you back and go, don't be emotional. Don't buy the house with emotion because you will overspend it.
Correct.
Yeah, awesome. I really love your 3 points. This is great. Okay. Do a quick recap of just the subject line. 3 points. Go.
Okay, 3 points. Review your KiwiSaver.
Done.
Make sure you have some sort of protection for yourself, so life insurance, and then have some buffer in your savings account.
Love it. Absolutely love it. Awesome. Thank you, Kunch, so much. And for those that have missed, Kunch and I actually did a whole entire season of episodes on how to buy your first home. And this is a sort of a more of a catch-on onto that if what happens after. So if you are looking to buy your first home, don't worry, there are episodes for you. So just go back a little bit behind and have a listen.
Search through those hundreds of episodes that we've done.
Use the keywords. Awesome. Thank you guys so much and talk soon.
Thanks. Bye.
Bye. And that's a wrap on that Home Loan Hub. Don't forget to hit subscribe and join me next time for more property tips and tricks. Your next smart move starts here.